Counsel Larry Kudlow. Mr. Kudlow, welcome back to Meet the Press, sir.
Thank you, Chuck. Appreciate it.
Let me start with what you see from the White House. The private sector seems to be concerned about, particularly the trade war with China, that there are some rough waters ahead, maybe a recession, that those odds have risen. What do you see?
Well, I'll tell you what, I sure don't see a recession. We had some blockbuster retail sales consumer numbers towards the back end of last week, really blockbuster numbers. And in fact, despite a lot of worries with the volatile stock market, most economists on Wall Street towards the end of the week had been marking up their forecast for the third and fourth quarter. That echoes our view. You know, what we've got here, consumers are working at higher wages. Right. They are spending at a rapid pace. They're actually saving also while they're spending. That's an ideal situation. So I think actually the second half of the economy is going to be very good in 2019. No, I don't see a recession. And let me add just one theme, Chuck.
Sure.
Just one theme. We're doing pretty darn well, in my judgment. Let's not be afraid of optimism. Let's not be afraid of optimism. It's
Fair
a funny sign of our times. And I think there's a very optimistic economy going on out there.
All right, but do you acknowledge that that one of the reasons businesses out there are not spending the money that I think you thought they were going to be spending on expansion because of the concern about what's happening with China? Isn't that putting some guardrails or some small g governors on this economic expansion?
Well, I want to get back to the China thing because there are some positive developments, believe it or not, on that front. But actually, in terms of business spending and business investment spending, which, as you know, is a key part of the economy, look, a lot of the slowdown that we've seen in so-called CapEx, capital investment, is really temporary because oil prices dropped down. And so the big oil patch, fracking and so forth, was not as rapid in the last year. We're down, $55, $60 a barrel, which is a good number, I might add. And for consumers, gasoline prices are very low. But the oil, gas, fracking boom has leveled off a wee bit. On the other hand, we're seeing a nice pickup, I think, in durable goods and manufacturing. And we're also seeing now, I think, intellectual property, which is scored in GDP. You know, that thing's growing at about a 10, 12% annual rate. And let me come back. The consumer part of this thing, 10% at an annual rate, last 3 months. We're going to get a blockbuster number in the third quarter. Okay. So, look, I don't deny that the energy sector has slowed a wee bit as prices have come back. On the other hand, money is flowing into the United States. We're the hottest, really the only game in town. And I think that's a very positive development. And we're seeing some pickup in manufacturing jobs and construction jobs as well. And incidentally, Chuck, one last point. Low interest rates, which is across the spectrum, is a very good thing for housing, for construction, for automobile sales. So low interest rates, no inflation, virtually no inflation, Chuck Todd. So I actually think it's a pretty good story. And again, let me echo my theme. Let's not be afraid of some optimism.
Okay, you say that, but you know, you actually said that in 2007, right before the second worst downturn in American history. This is what you wrote. There's no recession coming. This is in December of 2007. The pessimistas were wrong. It's not going to happen. The Bush boom is alive and well. It's finishing up its 6th consecutive year with more to come. The more to come was a massive downturn. So I admire your optimism, but the data is pointing in another direction.
Well, I plead guilty to that late 2007 forecast. I plead guilty. By the way, every other forecaster, CBO,
you weren't alone. You weren't alone. That's right.
Blue Chip,
you weren't alone.
They were all there. However, just a wee bit of Kudlow defense now. By February and March, on CNBC in those days, I did go to the recession call. So I will plead that I did see it. I don't know that anybody saw that kind of crash. But look, this is not then. This is not then. Our banks are well capitalized. Our financial system's in very good shape. And I must say, as the president is transforming and rebuilding this economy, he deserves enormous credit. A new policy of lower taxes and regulation and energy opening and trade reform. You know, we didn't quite get to 3%, but look, Chuck, the first 2 years of the Obama administration, we were just a hair below 3%.
Okay.
We're moving in the same direction. And let's be honest here, we've faced severe monetary tightening, 7 rate hikes in 2017 and 2018. I don't think all that was necessary. It's a miracle we were able to continue as well as we're doing. And again, bond rates are falling, 100 basis points decline. That's good for mortgages. That's good for business. And I think the Federal Reserve is going to now be following through.
Okay.
Lower interest rates at the low end because the bond rates have fallen, and that's the way that game usually works. And I think that's going to be a big help.
I want to turn to China. Right before you took the job with the president, you wrote the following: tariffs are really tax hikes. They have almost never worked as intended and have almost always delivered an unhappy ending. And I bring that quote back that you and Arthur Laffer and Stephen Moore wrote together, again, March of 18. You took the job 6 weeks later. When you pulled back the tariffs earlier this week, delayed them till December, isn't that an acknowledgement that you're convincing the president that tariffs are tax hikes?
Well, let me say a couple things on that. Tricky business. Our group is referring to the steel tariffs, but look, I think China is a very special situation. And I think President Trump is working hard to defend the American economy against unfair trading practices and unlawful trading practices and intellectual property theft and forced transfer of technology and so forth. China is a very special case. And we have to defend American interests, whether it's farming or manufacturing or automobiles or technology. You know this story. You've been covering it. So regarding tariffs, I will say this. What President Trump has taught me and others, and I think there's a consensus growing, a bipartisan consensus growing, the China story has to be changed and reformed. We cannot let China, pursue these unfair and unreciprocal trading practices.
Larry Kudlow, the president's chief economic advisor, much appreciate you coming on and sharing your views, sir. Thanks very much.
Don't